Welcome to the Payments Unpacked podcast. My name is Mike Chambers, and today I'm so pleased to be joined by Nick Davey from the Payment Systems Regulator. Now, Nick has kindly joined this podcast today to answer questions that have been sent in by the readers of Payments Unpacked newsletter and also some of my connections across LinkedIn. Nick, I'm so pleased you joined me on this podcast today. And before we jump into the questions, perhaps I could ask you just to tell me a little bit about yourself and the PSR.
Thanks, Mike. I'll talk about myself first. I could talk about the PSR afterwards. I'm Nick Davey. I've been at the PSR for just over 6 years now. Before that, I worked at the Bank of England for many, many years, doing lots of different things. What I do at the PSR is I'm a payments technical specialist. So I give advice based on my background on a number of different pieces of work. People who know me will have known me through pieces of work like confirmation of payee, app scams, cryptocurrencies, stablecoins, and a number of other things. So they're the things I tend to work on. The PSR, the Payment Systems Regulator, it is, as it suggests, a regulator, regulates payment systems in the UK for competition, innovation, and for service user needs. It's been around slightly longer than since I've been there. But it's about 100 people. We are in the same offices as the FCA in Stratford, and we work on a number of different issues, available from our website. And I'm happy to talk to any of those today.
Fantastic, Nick. Thank you. And as we jump into that first question, I think it's important to say that in addition to these questions being genuinely asked by my network, I haven't made them up. But also Nick hasn't seen them in advance. So we're going to ask the question and see what Nick has got to share with us. So Nick, if you're happy, let's go for it.
Yeah, no, I'm happy. Just to add to that, it totally is. It is totally live, and I haven't seen any of these questions. So I'm quite interested to see what people have asked.
Fantastic. Okay, and we're looking forward to your answers. So let's give it a go. Let's start in the payment space, in a very solid space. And each year, BACS and faster payment systems, they process around 10 billion payments. Over many years, they have proved to be dependable, resilient, and scalable. But as the payments industry embarks on a replatforming exercise, there is much to be gained and lost with the planned new payment architecture. Because it's no understatement to say that the whole of the UK depends on this payment plumbing. And every day, somebody I talk to wants to talk about the new payments architecture, and that's transition from the old platforms to the new platforms. So it would not be a surprise to have a question around MPA today. And this question is from Teresa Connors from Payments Matters. And her question to you, Nick, is what are the biggest near-term challenges for the new payments architecture? What are the biggest near-term challenges for the new payments architecture?
Okay, that's a great question. Near term is the interesting part there. There's a lot of challenges to the MPA. Just to say that I have colleagues who work on the MPA at the PSR, quite a few of them. I'm not one of them, so this is kind of more my view of these things, but I'm aware of what's going on. I mean, clearly it's a big challenge to do a replatforming. And one of the big things, obviously, is making sure that industry come along with you, right? That's one of the big things. So the kind of engagement. Because it's not just about building a platform in the middle, the MPA. It's about making sure that the services that are produced on the MPA are delivered, and that the PSPs who connect to the MPA can actually connect to it and make the changes they need to in their systems. So I think they're the biggest one, making sure the whole industry is set up to deliver it and not just taken in sort of isolation. The other thing is, I think the big thing for me, which is the MPA, but also for the RT renewal program, is ISO 20022 and messaging and enhanced messaging. I think that is a big challenge because that's more data, different fields, more sort of structured fields as well. And I think that is one where the sort of whole industry has to move alongside it, and I think that is going to be quite a big deal. As I said, it's not just the MPA, but I think that is quite a big near-term challenge. And then also users who then get the enhanced data have to do something with it, right? So the idea is that it's better for reconciliation purposes. It gives you better enhanced sort of analytics in terms of anti-fraud, etc. Some really good stuff there. but the industry outside of necessarily the PSPs have to be set up for it as well. So it's not just about Pay.UK in the middle or the bank in the middle. It's not just about the PSPs who are direct PSPs. It's also around the indirect PSPs. It's also around businesses, corporates, etc. as well. So I think they're all really big challenges that are going to have to be overcome. And that would be that's the sort of thing I would be thinking about, the near-term challenges. Obviously, they've got to procure the system. It's got to be built. I mean, that is a big IT project. Payment systems have done big IT projects in the past. Obviously Fast Payments was set up, new backs, etc. ICS, for example. These are all big IT projects, and they're all very complex as well. So that's not a little challenge either. It doesn't just stop with procuring a supplier and thinking there you go. It's the build, the testing, and everything else like that. That is obviously a big challenge. But I would be thinking beyond that. What are everyone else around the outside have to do as well, and making sure that that's all lined up, because otherwise that could go in an interesting direction. But also, not all the benefits could be realised if you haven't got everyone set up from, I would say, day one. But having been around a bit, and I think you've been around payments around a bit as well, I think some of that stuff does kind of get phased over time. It isn't necessarily day one, but just that those benefits are realised and that people are kind of set up to either include that additional data in ISO 20082 or use it. I think that's my view anyway. Does that help?
No, I think that was good. I mean, if Teresa had asked for the complete challenges and opportunities of new payments architecture, we could be here all afternoon, couldn't we? So I think it's good that she narrowed it down to near term. I was out recording a podcast yesterday with a technology provider on new payments architecture. We covered very, very similar themes. So no, I think that was spot on. Thank you for that, Nick. There is the danger that we could spend this whole time talking about new payment architecture, but we're gonna dip into a number of different topics and questions. And the second one, the backdrop to the second question, Nick, is around the cost of living crisis, eye-watering utility bills, the media focus on an economic downturn, the recession. That's the backdrop behind the second question. This question is from Peter Cornforth. Peter Cornforth is over at AnswerPay. And his question really refers back to our experiences during COVID and the pandemic. And he's saying, during the pandemic, a number of banks introduced measures such as mortgage holidays to help people cope with the extraordinary circumstances they found themselves in. So that's our backdrop: pandemic, banks introducing measures to help people cope with extraordinary circumstances. And Peter's question really says, if I bring this up to date, and given the impact of the cost of living crisis and recent surveys highlighting customer frustrations with support from their bank, will regulators consider intervening to ensure that necessary payment flexibility is provided during this particular challenge we face as a country?
Okay, right. I'm going to have to unpack that a bit, Mike. That's, again, a great question, and quite a challenging one, in fact, actually. Not just because of the economic circumstances, but who are the right people to actually engage on that as well? I mean, it is a difficult time right now, and I think payments have got a part to play in it, absolutely. And would we intervene? And that is, it also depends on how you intervene and who intervenes and at what level. Obviously, there's government interventions and various things like that happening. But I think for me, on this one, I mean, obviously we're a regulator, the PSR, who looks at wanting to provide for service user needs. Okay, so in this sort of economic downturn, I mean, in COVID, let's just talk about COVID a minute. Sorry, in COVID, obviously there was a kind of decline in cash, a big move to digital payments. Contactless did very, very well at that time in terms of serving user needs. Mobile wallets, etc., also very, very good in terms of convenience. A lot more online shopping and those sorts of things, which is great. That we had those systems involved and able to do that. Unwinding from COVID a bit, there's been a bit of a bounce back to cash, and so obviously you need to facilitate that need. But obviously the ongoing journey is now, what about people who, if it's forecast unemployment rises, for example, lose their income? Yes, we talked about mortgage holidays and things like that, which are, the products that the financial services provide in terms of credit, sort of and I think there is generally, I mean, I can't talk for the FCA, but I think generally there is a kind of willingness to try and help, if nothing else, the continuing duties coming in soon, and that is looking at some of those sorts of aspects. But in terms of payment specifically, and that's what I'm here to talk about, I think there is things we can do, and that's kind of look at the established ways of making payments. So direct debits, for example, great product, been around for a long time. A lot of people use it, but it is something that is quite blunt in terms of a utility company or whoever will put a direct debit through on a specific date. The money will come out of your account if it's there. If not, it'll bounce. It doesn't cater very well for sort of incomes that are variable, the gig economy, whatever. Those things is not so good, and managing money will become much more important for specific sections of society. So, so for me particularly, I'm quite passionate about request to pay, for example, which I think is a great development, and request to pay services. So you've got open loop, closed loop, but the whole kind of reason for them to exist, which is that you can control your money, right? So rather than my British Gas bill coming out on whatever the day of the month it comes out on, 10th of the month or something, they can send me a request and I can say, how much money have I got in my account? Oh, well, I don't get paid till 5 days time. Can I delay this 5 days, please, and have that kind of that conversation with British Gas? Or, oh, there's 3 bills that are coming in at once. I haven't got the money now, but I can pay that soon. Or can I structure it in a different way? Those things I think are going to become increasingly important. And speeches from people I work with, like our MD Chris Hemsley, etc., have previously, mentioned request to pay and how much that can be beneficial over these times. So, I'm passionate about it. I think people in the organisation are passionate about it. And but it doesn't yet seem to have the sort of traction that we'd want to have to serve that sector of the community and the society. That's one of the questions that has been unanswered, really. Why is that the case? So, I mean, I don't know if I don't know what regulators could do about that, because I don't know if that's a consumer or a business issue or if that's a payment issue yet. But certainly, we would like to understand why that's not the case, and would we be willing to use powers? I mean, I don't know, and realistically, I don't know, because I think if there is evidence that it would serve community and there is a problem. Usually when a regulator comes along, there's a known problem that can't be solved without regulatory impetus. Then we would take that through, we discuss that as an organisation and decide whether that needed regulatory impetus and what the benefits were. But at the moment, I think it's early days and not really understanding what the issues are with some of these services not getting traction, and whether it's that consumers don't know about it, or businesses haven't signed up to it, or what. I'm sure you probably know more about it than I do, but it's certainly something I think over 2023 we want to look into, given the economic climate and the benefits this is obviously going to have to quite a valuable area of society.
Nick, thank you for that. That was a great it was a great answer. Thank you for it. And I particularly, as I was thinking about payment holidays, they worked for a time, but the debt was still owed. It was just wrapped into the overall balance and it wasn't offset. And you tried to bring this to life about payment mechanisms that allow people to manage their money well. Allow people to feel empowered about how they pay, who they pay, and when they pay. And in times of crisis, give them the tools to deal with the payment rather than just not pay it and a debt rack up somewhere.
Yeah, no, absolutely. And I was thinking about this the other day, because we've seen a bit more of a bounce back in cash, and there was I think a soundbite in a press release that said, people are using cash to budget because of the downturn in the economy. Now, we've seen that in the past. That is a thing that we saw in the past. COVID has changed things, so it could be a bounce back post-COVID. We don't know why. But I was thinking, well, there must be tools in order to allow you these days to budget. Now, there are a sector of society who use cash because they are digitally excluded. They don't have phones, etc. Then that wouldn't work for them. But there's also a sector of society that choose to use cash because it's tangible and it's easy to budget, and they worry about the digital side. You haven't got any limits or caps or anything like that. Well, there must be ways to overcome that. Now, that might be a request to pay, that might be something else. But I think as we move into a more digital society, we've got to think about these sorts of products and services for people. And I think some of the time people do develop them, but it's very difficult to understand how you make money from them, because it's usually low income sector of the the society or whatever. And that, I think, we've got to have to overcome at some point, because we can't work on the basis that people need to budget because it's a tangible asset and that they know how much they've got left simply because they've got pieces of paper or coins anymore. So I think, we have to kind of at least think about that innovation and where it's going to come from. And I don't know how we're going to overcome how can you make a profit from it. But specifically with things like request to pay, I think there is that economic model because you've got businesses there. It's not just people to people or whatever. But yeah, we have to think about how we can empower people to budget correctly and make the best use of their money digitally, I think, in the future.
Yeah, I think you're absolutely right. There's a thing on the BBC today about cash stuffing, about putting money in envelopes for the gas bill, for the electric bill and everything else. And that sort of works in an analog world, but it's harder in a digital or even a partially digital world because firstly, your money is in a bank, but secondly, if you draw it out of an ATM from an envelope, you're likely to be paying your gas bill electronically. So actually, you've then got to reconvert it back to digital money and do it. So it is difficult. There was a lovely article from a blog from a neobank yesterday. I won't promote who they are, but they had done a case study with a customer who had moved to digital cash stuffing and had 19 pots. And they were using those sub pots within their main bank to allocate the funds for gas, for electric, for food, for petrol or whatever. So they were managing that sort of analog cash stuffing in a digital world. So that was really interesting to see that and see how people are doing it because, we're all at different stages, but the majority of people at least have stuck their toes into digital and digital money. And we need to be able to help people transcend from that analog world.
Yeah, no, I think so. I think that is the future. Anyway, sorry, let's go on to the next question.
Yeah. No, that's good. But let's go to the next question because the next section or the next question expands the thinking to a much more macro level. And the background here is, we're in a world where security issues are all over the place. We always hear stories about data compromise, ransomware, crypto fraud. They're all big topics of conversation. And this question comes from a former NED colleague of mine, actually, called John Wisbey. And John asks, how big is the risk of a catastrophic payments hack by a bad actor supported by quantum computers? And how could that risk be minimized?
Oh, okay. So I
don't know if you know John. John's a big thinker, so you'll always get a big macro question from John.
That's great, John. That's good. I would just say that the competent authority for cyber in payments will be the Bank of England, so they would be the people to ask on that. I'm not going to duck the question. I'm just saying in advance that's the case. Quantum computing and hacks. Yeah, now that's something I think has been raised more recently in the payment sphere, and I find this one really tricky because we're at the kind of dawn of quantum computing, so it's kind of still quite theoretical in my view. I mean, and I don't know how quick a quantum computer how accessible they're going to be to bad actors anyway, but eventually assume they are, how quickly they can decrypt an encrypted file, and what does that mean? And then can you use quantum computers to encrypt files in the first place so they can't be decrypted by anything other than a quantum computer? And there are kind of wonderful, almost sort of sci-fi scenarios within this. Do I think it's a risk that we should worry about? I think it's a future risk, certainly, and I think people are starting to think about it now. I would like to understand a bit more about the evolution of quantum computing and the likelihood of this being actually accessible to individuals outside of like large institutions or universities anytime soon. That's what I would want to understand, and also the future of encryption as well. But certainly other people who look at this stuff are putting it on risk registers right now, and sort of saying it's going to be a game changer if it does happen. So they're probably wiser than me about this stuff. More generally, I think we've seen stories in the press, BBC and others, I think, today, certainly about Russia and Russia now kind of going more hacking at the UK. Generally, my understanding is that the payments areas have all been pretty good in terms of being protected, from cyber hacks. They're pretty resilient to that sort of thing. We don't want it to be too tested if possible. I mean, that prevention is better than cure. Obviously, people tend to go after banks and stuff like that when they're stealing money, and we've heard of ransomware and all sorts of places, the NHS and all sorts of stuff, which is terrible. I wish it didn't happen, but we can't just rest on our laurels. I think with cyber, it's one of those things where you have to keep investing and keep understanding what's going on and making sure you're resilient. And my understanding is the payment systems are doing that, and the bank are regulating for them to do that. So yeah, but quantum computing, I only read that in sort of science fiction books, really, to be honest with you.
I am the only really reference I've got to quantum computing is somebody said, "Come, you've got to come and see this. It looks like a massive candelabra hanging from the ceiling," and that was the quantum computing is something about the cooling or something. So it's beyond my knowledge level. So maybe I'll go and see that at some point. Now, you wouldn't expect a conversation today and some questions posed by my community to not include one about fraud, about payment fraud. The levels of APP fraud in the UK, it's just embarrassing and it's eye-watering. And it's great to see some of the things that are happening around things like confirmation of payee and some of the analytic stuff that's going on. So this question for you is around the subject of payments fraud. You know me reasonably well. We've met a few times in the last little while as well, and we've had these conversations. This question you could think had been written by me. I can genuinely say it wasn't written by me. It was written by Chris Vincent. So I'm not sure if you know who Chris is, but Chris wrote this question, not me, and I'll read it to you. It says, "Dear PSR," the question says, "Will you please take a look at pay by link, i.e. initiating a payment or a payment request via SMS and email, and either legislate against it or insist that additional measures to protect APP scams are initiated through Pay by Link. Ideally, perhaps you could outlaw it and tell banks to use the Pay.UK's much more secure request to pay messaging scheme." So, Nick, I could have asked that question. This is genuinely from Chris Vincent. So I open the floor to you with that question around Pay by Link.
Okay. Thanks, Mike. Thanks, Chris. I don't know if you're one and the same. I'm assuming you're not.
No, I can genuinely say Chris is a genuine person.
Yeah. Pay by link. So, are we going to outlaw it? That's a really good question. There is a wider question on this about social media and various things that and telcos and things like that, which kind of lead to the initiation of the fraud, the app scam that then kind of goes through the banking system. And our view on that is that there should be more to be done by social media firms and telcos. Specifically about Pay by Link, it's very confusing for consumers. I know it's been outlawed in other jurisdictions. It's very confusing for consumers and individuals to be told never click on a link in an SMS or an email, and then to be sent via other people links in emails like from banks or whatever. And then when you don't click on it, then something happens because they tell you that you haven't done something because you haven't clicked on the link in an email. I think it's very, very confusing. I think something does need to be done to clarify what the position is on pay by link, or at least those sorts of things. I would much prefer a secure messaging service, whether it be request to pay or something else. But just generally, if you're going to tell people that phishing attacks are links in emails and SMSs, then why would you send someone something to click on in order to pay somebody? That's going to lead to a lot of kind of more app scams, isn't it, than without. So yes, we do need to do something about that. The PSR can't legislate as such because we're not a legislator. So we are like we have some powers, but I'm not sure we quite have the power to ban pay by link, unlike the government, unfortunately. So I think there is probably someone else who would need to do that. But we can certainly raise the issue and the point about it in the work that we do, and to explain that we need to make sure that we kind of get away from phishing emails and all that kind of bad actor nasty stuff that happens. But yeah, I don't think we've got the power to do it, but I fully understand the issue, and I do support the narrative about avoiding it as much as possible. So I think on our app scams work more generally, there are lots of things we are looking at. I don't think we've looked fully at pay by link as one of them. We know broadly different different scam types. UK Finance collect data on the different types of scam types. We know where the kind of biggest proportion is in terms of scams. We know we get data on where the kind of fraud goes to and things like that. So we look at that sort of thing. We have asked, I think, in the past for data on, where the scam sort of originated in. So, did it originate in Facebook or, telco or whatever? And I think we have not really got great data on that side of stuff. And I'd be quite interested if anyone anywhere has any information on how much pay by link has added or has kind of ended up as a scam, if you know what I mean. What's the proportion of scams that are pay by link? The other thing about pay by link, of course, is that it's not necessarily going through to making a payment to a fraudster. Obviously, a lot of these phishing attacks, you think you're going to make a payment, whatever, and then something goes wrong, but they've collected a load of details. And then you might go into unauthorized fraud because they've got kind of banking details and passwords, or you might get a phone call saying, "Oh, you just tried to make a payment to who you might have thought was legitimate. That didn't go through," and then you start that conversation with a fraudster. So it might well be part of a different fraud typology. But I think we need to get away generally as a society from having links in emails and SMSs, because it's just a bad thing that kind of mostly leads to there are genuine cases, obviously, but quite a lot of them, as I see, and I'm sure you see on a daily basis, end up kind of being phishing and fraudster type attacks. So I think the whole thing is kind of bad, and we should probably get rid of it. But how that's done, I don't think I don't think that would be. We are a payment systems regulator. Unfortunately, that kind of seems to be more in a sort of telco, social media side of things. So that probably would be outside our competencies. But in terms of making people aware of stuff, that's obviously what we're doing with app scams. We are trying to prevent them. That's the whole point of the work we're trying to do. So if this is a way of preventing them, at least making people clear that this is a problem is something that we would try and do. So that is probably about as best as answer I can give to that one. But
no, it was a good answer. Thank you for sharing that. I mean, as you're aware, other countries have done stuff. I was on the call earlier this week into Singapore with some government and some regulator type people, and the Monetary Authority of Singapore has done something very specific around SMS and email. For me, it's just perverse, isn't it? The banks say, "Don't click on the link. Don't click on the link. Don't click on. Oh, this one's okay. Don't click on the link. Don't click on the link. Oh, this one's okay." It just doesn't work on much wider things. But I do appreciate your answer from the perspective of a regulator.
Yeah, no, it doesn't work. But it's not just that. The fact is you can spoof SMSs anyway, so it looks like it's genuine from your bank, be that Santander, HSBC, Lloyds. There are other banks available. So, and that's one of the real big problems, that you've had an interaction with your bank, and then you get something that says click on a link, and that's spoofed, and then that is not genuine. But that would confuse. There's this idea that a lot of these scam types you can easily identify. I don't think if I got something from one of my banks that kind of came through that said, "Oh, click on this link," in a list of other interactions I've had with them, that I would know that's a spoofed message, and that's bogus.
No, absolutely.
And so you've got to move away from that, haven't you? Because otherwise, how do you know?
Very complex, and all part of that fraud mix. And it's this thing about how a payment is initiated, and then that's how it's settled through the payment rails. Normally faster payments in these instances. So you've referred to touched on the next question a little bit, but here's a chance just to expand. And you talked about social media companies and things like that, because Teresa Connors from Payment Matters, she was on one of my podcasts a few weeks ago, and she's followed up with a question really around your views on fraud. And her question takes the end-to-end chain of a payment and the end-to-end fraud chain. And it says, who are the influential stakeholders in the fraud chain? Teresa's perspective here is that harm is in play before a payment journey is made. So she's sort of interested in what discussion or what progress is being made about preventative effort amongst the non-FI stakeholder community.
Right. Okay. So that is a good question. Thank you very much, Teresa. So this is what some banks call upstream polluters, I think is the terminology they use.
Fantastic phrase.
Which is fantastic phrase. Upstream polluters. So, and this is what I was, as you said, touching on previously. So, if there's a mule involved in the laundering of the money, for example, they're usually recruited somehow, whether in olden days, you'd put a board up. There'd be a university board, and someone put a notice board up saying, "Do you want to earn some quick money or something? Here's a phone number," and you recruit them that way. These days, it's sort of people don't even know they're being recruited via Facebook and various other social media firms, via adverts and things like that. So the rhetoric there is to get the social media firms to do more to stop these bogus ads going up to recruit mules, for example. But it's not just that. It's they're the what industry term purchase scams as well, which is sort of ads for goods on a marketplace sort of website which don't exist, and so you pay the money. Now, if you use cards for that, then chargeback rights usually apply. You use faster payments for it, no protections at the moment. They've got your money, etc. Except the CRM model was implemented, so some of the banks have signed up to the CRM. The big ones have, so you can go through that route, which is obviously a voluntary code. Anyway, but there is that, but there's no formal protections in the way there is in cards, for example. So there are things like that. Then you've got the kind of telcos. So you've got things like spoofed SMSs we just talked about. You've got emails that are being sent out, that look genuine, or even ones that totally don't look genuine, but they're still being sent out. And is there more that can be done there to stop someone using like an email service to blanket email everyone saying that you're a Nigerian prince and you've just had to exit the country with $2 million, and if you just give some banking details, etc. So those ones, there seems to be less of those these days. I don't know. That might just personally be me. It might be that actually some of the email companies are doing better at that. I don't know. But there was a lot of that a while back, and it got to the point where everyone was sort of like, comedians were sort of joking about it. So it was so widespread. So yeah, there is more that can be done, and we do want it to be done. Now, again, that's kind of outside our area of competence. So we discuss this with other regulators in those areas, and obviously there are bigger discussions going on in the kind of crime space. Government are having discussions, and they're coming up with plans also. And there's legislation going through on what used to be called the Online Harms Bill, but I can't remember what it's being called now. Which were potentially looking at those things as well. So there is a lot of activity in that space, and I believe that a lot of the firms involved are looking at what they can do and asking people about, well, what is this stuff? Because they're not in the same ways that most people on the street are not exactly fraud experts. I don't think a lot of these guys, their main business model is not anti-fraud stuff, right? They're not anti-fraud firms. These are social media people. They're getting two people, they're getting people to talk to each other or have your face page on your Facebook or Meta and that kind of stuff. And so, they themselves have to understand what these things are, as much as industry's come along and done the same thing. The thing that kind of someone in one of the banks who works with fraud says, well, yes, there is a case that there is that stuff that's going on, and you want to stop that. You want to prevent it at source if you can. But the one thing that all of these fraud typologies have is that it leads to one person pressing send on a payment to somebody, and that's going to someone's account, which is either in control of a bad actor or someone who's been recruited by a bad actor. And so you can't just leave it to that part of it. You can't just say it's all in the problem of the upstream polluters. You've got to say that somewhere within the financial services there is also a part to play, right? Because that money is moving, and that's why we're involved in this as well. Because we also think there's stuff that the banks, the PSPs, can do in order to do more. And that goes back all the way to the Payment Strategy Forum stuff, where they're financial crime and more about information sharing and why can't there be central databases and lots of stuff, which is all good. But since the PSF time, as far as I'm aware, some of those great initiatives have not progressed as much as you'd expect them to. So, yes, try and stop at source, but also some of that's never, I'm a realist here, some of that's not going to work, right? I don't think Meta are always going to know that it's a bogus ad, especially if they've never dealt with someone before. It's the second time or the third time and people report it to them, yes, maybe, but the first time, you don't know. So some of that stuff is always going to trickle through, and then you want to capture it at the kind of the level of, hang on a minute, do we know who this money is going to? Do we know who this money is coming from? Does this look legit? And then trying to stop it at that level as well. Because otherwise you've just got people blaming it, other people in the chain for it, but then nothing necessarily gets done. That's the risk. I'm giving the bads a bit of a bad name here, because there are AI tools and anti-fraud tools, and there are suppliers on that stuff, vendors in that market, and I know banks have got those things. But in terms of things like just sharing information, it's not done very much at all. I mean, COP was the first time, I think, that we've got a system in the UK where banks are actually sharing information before a payment with each other. And there's more information they can share, and that's something that's being developed now. And those sorts of things as well. Now, if you could get telcos and social media firms and these areas, with these upstream polluters, as said, to be sharing information backwards and forwards between the banks, that would even be better, right? You'd enhance it even further. But, I'd say sort of small steps. Let's build up the ability to share data amongst banks. Let's have those kind of conversations about what's going on with the telcos and what and social media platforms, what they can do, and then what would be beneficial, and sort of try and kind of piece it all together as a giant jigsaw puzzle. But certainly we're in the prevention game right now. Is who can prevent it when is certainly something we would want to explore.
Yeah, I think you're right, and it is incredibly complex, isn't it? There's much you can do in the centre of the payments piece between, as the payment goes through the rails, but you can't only think in that space. You've got to think at either end. And confirmation of pay, being sure who you pay, is a great way of doing something at the beginning of a transaction to try and have more trust and confidence that the money is going to end up within the right person. But as you say, there are actors or parties in the stakeholder further out in the payment chain there that can play their part. But there's no one answer in one place. It will improve, and with all the fraudster, where we all work together and we consider the whole payment journey, from the thought of a payment to the money being taken out of a bank account and done and something done with that money. So it's a very wide spectrum of activities.
Yeah, no, absolutely. And there's lots of different parts, and some of these payment chains can be quite complex as well. So to be honest, with the app scam stuff, we look at the journey between the customer and the first account the fraudulent funds are received into. But we know that money is then kind of laundered through a number of different accounts and things like that. There are products that try and track them, and I think some of them are pretty successful at doing so. But at that point, you've got a whole different conversation and a whole different regulator actually saying, well, actually, how do we stop all these chains of accounts and all these kind of accounts that have either mule accounts or ones that have been set up by fraudsters and gone dormant? How do we close all that down as well? But and within that, you've also got this kind of direct relationship as well, because you've got a customer to a PSP, or a PSP even maybe to another PSP who might be a customer of another PSP who's their indirect access provider, to a system back to another direct who they might be into who might go into an indirect, and that might be the first real account which the fraudster has got an account at, and then they move it on through a whole chain of accounts, and maybe cash out in crypto, maybe cash out in terms of sending money abroad. And within that, you mentioned this earlier, but in terms of crypto, I haven't got the data yet, but anecdotally we hear quite a lot about how many crypto scams there are, and obviously we're hearing that some banks are limiting the amount of money you can send to crypto exchanges where they can identify those crypto exchanges via bank account. And sometimes you're seeing these people, basically sending money to a crypto exchange, and then it's lost forever and it's completely anonymized, and things like that as well. So it's not, there's no one size fits all, and there's no kind of, it can be quite complex to unwind. Often stylized, you think customer, big bank, makes a payment to a fraudster who's also got a big bank, who then moves it on and then it disappears. But it's not always that simple. I wish it were, because it would probably be a lot easier to stop, but it's not that simple.
If only it was that simple. But no, thank you for picking that out. And I think when you start adding crypto and that, should I be allowed to make payment to my crypto account somewhere, or should my bank stop me? You're starting to get to a very difficult set of questions and considerations in about the freedom I have to spend my money. So, no, very interesting. You'd be relieved, I think, to ask. You'll be relieved, I think, in terms of my next question. No, I'm not going to ask it, because my next question is the last question, but also I think you might find it a bit easier to answer. So if I think back to my payments career, I've spent almost all of my payments career in the City of London, in the Square Mile. You were a resident of Threadneedle Street for a long time, and you've escaped to Stratford. And as I reflect on sort of those points, as an industry and as a nation, we are often far too London-centric. I'm chairman of a request to pay provider called AnswerPay. We're based in Leeds in Yorkshire. And it's been a real eye-opening to me in terms of that vibrant fintech talent pool that Leeds and Yorkshire offers. And this sort of question, it comes in two halves. The first half is from Stephen Moore. And Stephen asked you a very short question. It's the shortest question of this podcast, Nick. Why do the PSR only recruit in London, is Stephen's question.
Well, we're only based in London. I think... do you mean recruit as in if you get recruited by the PSR, you have to work in London?
I think that's probably where Stephen's coming from.
Yeah, I was just going to say because I was discussing this with colleagues when I was in the office yesterday. We have a very international group of staff of economists and associates. We have people from various different countries and things like that. So I wouldn't say that we are limited to just people who live or work in London. We are hybrid working, but there is at the moment a requirement to be in the office approximately half our time. And so you're right that there is that kind of... we're not like the SCA. We don't have a Scottish office in Edinburgh. And that's a valid point. I'm not the recruitment specialist for the PSR. I think we get talent where we can, and a lot. Just to say that some of my colleagues do live in various different parts of the country and do commute. But even in my days at the Bank of England, I remember someone who lived in Birmingham who commuted, and he lasted a certain amount of time at the bank and then just couldn't do it anymore because just the travelling was killing him. And I can understand that, but I think that's probably because that's where our head office is. But yeah, it's a fair challenge. I don't know the answer to that. Apologies.
No, thank you. When Stephen asked the question, Chris Hyam from Secure Trust jumped straight in, and this isn't a question, this is just Chris's view. I think you might know Chris, but Chris said, seconded, forward-thinking financial institutions are tapping into the talent across the country, as indeed our government departments. It feels like the regulators should be taking advantage as well. So as a resident of the northeast of England, Chris, I'm sure he's got lots of folk up there who've been involved in payments and banking who've got a lot to offer. So,
no, that is a fair challenge, and as some banks have kind of gone back to almost sort of being in offices, but some people I talk to, and I'm sure the same people you talk to, have taken the decision that they don't need to be in a central location anymore, and that home working can be the thing. So it has also varied by institution. Yeah, we seem to have retained the desire to be back in an office some of the time, per week, but. Yeah, I see what you're saying. Can you not go to full remote working and you tap into talent elsewhere? So I'll take that one away, I think, is the best way I can put it.
I'm sure Stephen and Chris will watch the PSR actively on that. Nick, as we conclude out, thank you so much for taking part in this PSR Focus podcast. I'm so pleased that you agreed to do a Q&A session, and I'm really, really impressed that you agreed to take the questions blind from my audience, my newsletter readers, and my LinkedIn connection. So yeah, that's really impressive. So thank you very much for that. As we close out, how can we find out more about the PSR and how can we connect with you?
Also a very good question. So in the first instance, the PSR webpage, I think, is probably the place we try and archive most information. It's got news, it's got our press releases, it's got consultations, it's got everything. And obviously you can Google search for us as well. That's not a problem. That's to find out more about the organisation and what we're doing. Within that, there are links on the webpage to contact any of us, I suspect. Specific pieces of work have usually a specific email address. So Confirmation of Payee has one, AppScams have one. You can email that directly. There is a contact us email address as well to send questions or try and contact us as well. Me personally, I won't give my email address away, but my first name dot surname at psr.org.uk is probably going to work. You can also I'm not on a lot of social media, but I am on LinkedIn if you want to reach out that way. That is also fine. Or they can talk to you, Mike, and you can pass them on to me. That would also work. But then you know the hordes of people who are going to come to you to ask for my details. I don't know, but yeah, reach out if you need to. But yeah, please.
As Nick said, you'll find him on LinkedIn, but also I regularly go to the PSR website. It's a wealth of information on there, so always a good place to go if you've got a question. So thanks again, Nick. Thank you also to everyone that's listening to this podcast today. I do encourage you to subscribe to the Payments Unpacked podcast. You'll find us on Spotify, Apple, and a few other podcast platforms as well. And while you're at it, don't forget to subscribe to the Payments Unpacked newsletter at payments-unpacked.com. Thank you for listening.